Elon Musk, the ultimate indicator when it comes to crypto cycles. Follow me here in this video because I really think it's true, and I want to explain exactly why that is and just give you just a very simple illustration that goes all the way back to the last bull market. And then we also just have the fear, the volatility, just all over the place. The fear rising right now. This is a volatility S&P 500 index, and you can just see on the daily. Let me just zoom in because I was very zoomed out there. On the daily chart, you can just see this uptick in fear. It's happening right now because of some things that are happening in the very short term. So I want to talk about that. I want to talk about that in relation to the Bitcoin chart. This is what the Bitcoin chart looks like. For context, I think the biggest thing I myself am just consistently reminded of amidst all of this volatility is the very fact that we have a halving here, we have a halving back here. It's 2020, 2024, and we're kind of just over halfway through entering this last bit of time range before we get to that next halving. This is the cycle shift area. There's going to be upside. There's going to be downside. I would not say just because we've exited that bear market low, we're in this bull market, similar to how we were not in a bull market back here. But there's to be anticipated moves of volatility, sideways trading, frustration in the markets before we get to the bull market, which might await us right there. So I want to just set that tone because there is so much short-term volatility on Bitcoin. We're going to even look at that on the daily chart in just a couple of minutes. But this is what we have going on. Stock slide with debt talks, Fed minutes, and focus. These are the two things really happening. Hang up in Washington's debt ceiling negotiations is turning out to be longer than expected. Look at this, everybody. Kevin McCarthy, House Speaker, we're nowhere near a deal yet. This was yesterday. Hours earlier, he said, I think at the end of the day, we can find common ground. So hours earlier, kind of sounds like there's a deal potentially happening. And then all of a sudden, we're nowhere near a deal yet. These are the people running the country. This is the leadership that people have put in charge to make decisions to guide the country forward, right, into prosperity and success. And it's not happening. And so when we talk about macroeconomic events and the failure of banks and the banking system and things are a mess and fear is rising, we have to really remember the people that are in charge, they're dropping the ball like consistently. This keeps happening. This is a very micro type of view of that, the debt ceiling negotiation that's happening. And this isn't the first time this happened, just coming down to the wire in terms of the debt ceiling talks and negotiations. But it's just interesting to see that these are the people. These are the people impacting the markets. We look at S&P 500, it's because of bad decisions, right? Like that's what's happening here. Now, let's go back to this article because we have other things going on. Investors are also focusing on the release of the Federal Open Market Committee minutes on Wednesday afternoon. The policymakers' comments could shed light as to just how seriously the central bank is considering holding interest rates steady and reveal whether any FOMC members leaned toward a pause. This is happening this afternoon. The question is it going to be kind of a more bullish take, a more bullish sentiment, or is it going to be just bearish sounding? If that's the case, I think we can anticipate this fear and volatility index, the fear to continue to rise. But in the short term, if all of a sudden, just like that, there's this sentiment shift because something in the minutes looks kind of bullish and promising and optimistic, markets could bounce, right? So here's S&P 500, for instance, on a daily. I mean, if markets bounced, it could close green, right? So this is something on the short term that we should pay attention to, I think. But it really is the macro that really gets me because we know in the short term, there's going to be a lot of volatility as we kind of get ready and prepare for that next Bitcoin halving and the next cycle. And we track those things. But what are the indicators telling us? And technical analysis indicators are saying from a macro perspective, things are starting to really turn around. And I continue to maintain my opinion that this right here, the bear market of 2022 was the worst of it. And that's based off of data that says, almost over the almost 70 years past, the year before the recession is the worst year for the markets. So economy could just do terrible 2023, but the markets are not the economy. And the markets could have bottomed back here. So that's something I continue just to really maintain. And the other thing is, if Bitcoin is going to fall in the midterm even more, there's so much cushion to the downside for it to consolidate and for crypto to consolidate. So I want to keep that in mind. But here's where the other indicators outside of technical analysis indicators, and I'm not going to get into all of the TA indicators or on-chain metric indicators, but there's other things. There's social indicators, and Elon Musk, kind of one of them for me. Elon Musk, and follow me here. This will take a couple minutes to walk you through this story. This was February 8th, 2021 on Doge. Elon Musk pumped Dogecoin into a 50% gain, and check it out. Like right back here is basically what that article is referring to. It's February 2021. January, February 2021. So that's back there. Next article, check this out. Check this out. Elon Musk's latest attempt to pump Dogecoin fails miserably. Okay? So what's going on there? So this was July 1st, 2021. Let's go to Doge chart. So July 1st, 2021, we're looking at like, right around here, I guess, right around there. And so his failed attempt to pump Doge, right? This was a success. And then look, the steam is running out, right? And this is obviously, you can see the top was already in for Doge when this was happening. So he tried again and it didn't happen. And now here's the third article I want to show you. Elon Musk breaks silence on crypto, warns against Dogecoin speculation. Okay, now we have a very interesting dynamic. It's kind of like this indicator dynamic. The Tesla co-founder advised against going all in on Dogecoin. I'm not advising anyone to buy crypto or bet the farm on Dogecoin. So there's a discouragement here. There's this discouragement factor sentiment coming from Elon Musk. Back here, 2021, there was kind of an encouragement type of sentiment, right? So this is the picture of a bull market. Encouragement, it's when you should start actually starting to really evaluate, okay, let's monitor the greed that starts coming into play. And you can see the greed that came into play. And then right now we're getting this discouragement, right? So it's more of a fear type of headline. And when that type of thing starts happening, it's the inverse of back here or in the middle of a bull market. The inverse of that is maybe we're getting close to a bottom. And it's not to say that's the bottom indicator, but look at the change of tone from pumping Doge, right? And trying again to pump Doge to now discouraging against it. And this really doesn't have anything to do with Dogecoin at all, but it has everything to do with these counter indicators in terms of sentiment, these social indicators in terms of sentiment. People are getting very fearful in these markets. And when we have data like the year before the recession is the worst of it. And mind you, in a recession, there's probably going to be a lot of fear, right? There's going to be rising fear because the economy is just not doing great. And because, politicians can't agree. Like in this article, we're nowhere near a deal yet. Earlier in the day, I think at the end of the day, we'll find common ground. So all over the place, the fear is high. Economy is not doing great. Waiting on Fed minute. Anticipation is just rising in terms of what is next. That's when I think it's very good just to remain calm, but pay attention to all of these things that are coming together, because I think they really illustrate so nicely the cycle shift. And I say that within complete context of we could fall. Bitcoin can just continue down below 20,000, right? For the rest of this year or something. But that would not be, in my opinion, as bad as what we just went through. I think the worst is over. And when we're looking at everything like the headlines and the fear and volatility index over here, we're even looking at Bitcoin charts. You can just see on the shorter term, this is a daily. Bitcoin's been at this resistance anyway. Put aside debt ceiling talks and Fed minutes. Bitcoin's been at this resistance at the lower trend line, and it's kind of just cruising down. On the short term, there's $24,000 has been in play, no matter what's going on, just strictly technical analysis. That could be a macro high or low for Bitcoin. That could be short and midterm bullish for Bitcoin. So it's the bigger picture here. It's all of the indicators and all of the context to the developing story that we have. And the developing story that we have is, I think, the Bitcoin halving is coming very quickly. Time is kind of running out in terms of preparation. And those are just my thoughts in terms of all the headlines and how it impacts markets today. So let me know your thoughts, everybody, in the comments below. I really appreciate you cruising through. Hit the subscribe and like. I will see you in the next video. God bless.